Hello friends, this is Gaurav from Lamoksh Investments. Welcome to Paisa Vasool, the November newsletter. We'll start with the world this month as we saw it from our eyes. In US and globally, the virus resurfaced. While inflation and tapering fears remained, Omicron took the center stage and shook global markets in a big way. Dow Jones Industrial Average fell by 3.73%, the broader Russell 2000 by 4.28%. Tech-heavy, Nasdaq was the only index which managed to eke out a small gain of 0.25%. However, the longer bull run structural theory in US remained intact. Year-to-date returns of most of the indices are significantly positive. Dow Jones Industrial Average has given 12.67%, Nasdaq has given 20.56%, and S&P 500 by 21.59%. In his testimony to Parliament, Jerome Powell, the chair of the Federal Reserve, spoke about removing flexibility from his commentary. He also talked about increasing the pace of tapering. It is likely that the stimulus will get reduced from USD 400 billion to around USD 200 to 250 billion and finish well before the original timelines of June 2022. A look at the US market charts. US indices, as you can see clearly from the chart, in last 1 month, most of them have corrected. Whereas if you look at the YTD and the yearly charts, they show significant increases. You also see the right hand side chart, which is the volatility chart or VIX. The 1 month volatility increased significantly by almost 67.2%. If we look elsewhere in the globe, we realize that economies overall remain near records, despite corrections in November. They're trying to cope with several worries, including a winter wave of rising coronavirus cases in Europe. Europe struggled with coronavirus right throughout the month. Several countries, including Germany, went for a partial or a complete lockdown. This led to a huge uncertainty, and towards the end of the month, Omicron added to the fear. In China, People's Bank of China suggested a shift of stance towards more supportive monetary policy. The report from the bank also dropped the phase to control the valve of money supply, which suggests a stepped up monetary easing. Hang Seng Index fell by a massive 7.49%, and contradictorily, Shanghai Composite was up by 0.47%. Korean Kospi was down by 4.43%, while Japanese Nikkei fell by 3.71%. In France, CAC was down by 2.5%, and Germany, which was impacted by the lockdown, corrected by 4.47%. As far as commodities are concerned, we saw crude tumbling by almost 17% in November. The fall appears to be a result of geopolitical and sentimental reasons and not really a result of demand and supply situation. Demand remains robust. We also saw that most of the major economies, including US, China, India, and Japan, released oil from the strategic reserves to cool the prices. Gold was largely flat, silver was down by 3%, steel continued its fall and was down by 10% in November. One exception was the lumber prices, which were up by 41% in the month of November. Another fall that happened was in the cryptocurrency space. Bitcoin fell by 10%, and most of the other cryptocurrencies showed a similar trend. It is likely that Indian government will introduce a bill on cryptocurrencies in the winter session. RBI is also likely to introduce a digital currency. The news led to panic in the Indian cryptocurrency market, and a lot of carnage was witnessed on Indian exchanges. Currency pairs: Euro USD was trading at 1.13, GBP USD was trading at 1.33, Aussie dollar to USD was at 0.7153, and USD INR pair was at 74.9%. These are the two charts which shows the fall in the Brent and Bitcoin prices during the month of November. So in India, the slide continued in November. Most of the indices languished again in November, and Omicron towards the end of the month had its impact. Foreign portfolio investors continued to withdraw from the Indian markets on back of higher valuations vis-a-vis other peers. This is to be noted. Foreign portfolio investors typically behave in this way. They move from one geography to another geography depending upon the valuations and also because they wish to book profits. Even then, Indian markets have been very resilient. Domestic institutional investors have been a big support. They have continuously ramped up the purchases in Indian stocks. New investors have also aided this resilience as total number of demat accounts touched a whopping 8 crore mark. In the month of November, the benchmark index Sensex lost 3.78%, Nifty 50 was down by 3.9%, and Nifty Bank was a big underperformer and fell by 8.74%. Among the sectors, private banks lost 9.8%, PSU banks were down by 9.38%, autos corrected by 6.14%, and metals by 6.5%. Indian Volatility Index was up by 21.4%, indicating increased risk in the markets. One positive news that came out towards late in the month was that Indian GDP grew by 8.4% in the second quarter of the current fiscal. Indian November factory growth, November PMI stood at 57.6 on strong demand. So there was definitely a red in November, but if we again take a look at the longer picture, we realize that we are green year till date. 1 year performance of Nifty 50 is 31%. Nifty mid cap is up by 51%, and Nifty small cap is almost up by 62%. Nifty Bank, while it has done 21% return in the year, but it has lagged the peers. So there was a November fall in various sectoral indices as well, but there were yearly gains. So if you look at the metal index, it went up by 60% and fell by 6.5%. If we look into the future and try to predict, we can talk about one major concern which is clearly hogging the limelight. Omicron is a clear risk and danger. It's a result of vaccine inequality. The virus originated in South Africa, where vaccination has covered barely 28% of the population. In most of the developed countries, the percentage is much, much higher. In Africa overall, however, it is just 6% of the population. So where are we and what's going to happen? We feel there's a global overreaction. World has learned its lesson, and prompt action coupled with global vaccination drive will restrict its spread. We know that its severity is perhaps limited, but the infection rate is very high. It is quite possible that it might cover a significant population of the world, but not be lethal. Inflation will continue to remain a chief concern in the United States and elsewhere. Fed will try to curb inflation more proactively, and panic around tapering and potential rise in interest rates would possibly be limited. FPIs have been FPIs or foreign portfolio institutions have been shying away from Indian markets in the last few months. Booking their profits is perhaps a right strategy as far as they are concerned, but in my view, they should be back sooner than anticipated as valuations will become more reasonable. We continue to remain bullish on equity markets for a long period of time. Indian markets, we believe, are best poised to capitalize on recovery in global markets, and structural reforms initiated by Government of India will aid this recovery. There's also fear that upcoming state elections in India could derail economic reforms. We feel that these fears are misplaced. The winter session of Parliament will witness some important bills which would be considered by the Parliament. The bill on cryptocurrencies can play a spoilsport for the crypto lovers. So we'll have to wait and see how the cryptocurrency world reacts to such developments. Now we'll talk about the portfolio strategies from our stable and how did they do in the month of November and since inception. Sun, which is the portfolio wherein core portfolio of high quality companies. These companies are very high standard companies and have high corporate governance standards. They have sustainable high growth, low debt and balance sheet, and consistent high performance. The chart shows performance since their inception, including a 1 month backtested data, and clearly shows how well Sun has done over its benchmark of Nifty 100 index. There was some correction that happened in the month of November, but if we still look at the overall picture, it's quite good. Earth is our sector agnostic, a market cap agnostic portfolio, which is aimed to generate superior returns with higher risk. Emphasis has been placed on identifying companies with quality management, strong fundamentals, conducive environment, potential for operating leverage, and lower debt. The chart shows that Earth has done very well as compared to its benchmark indices and also against Nifty 100. This performance is, as chart exhibits, is from May 6th of this year. The moon is the most enigmatic and vibrant portfolio in our stable. It tries to capture the momentum. It tries to take care of economic environment, incorporates turnaround stories, plays momentum, corporate restructuring, and also does investments in cyclical sectors. The performance has been quite wonderful for this portfolio since its inception on June 7th, and performance, including 1 month backtested data, is exhibited in this chart. Again, it has clearly outperformed the two benchmark indices in a very significant manner. Galaxy is another collection of super stocks, 10 in number, which hopes to achieve astronomical heights with a classy set of companies backed by strong fundamentals and high standards of corporate governance. This is free of cost to all small cap users. So our commitment stands for trust, affordable pricing, unbiased advisory, transparency, and personalized attention. Our philosophy, in quotes, is given here in this slide. Most of these quotes are from Warren Buffett, Charlie Munger, and some of these luminaries who have shown tremendous growth in their portfolios over a long period of time, and we clearly follow some of their philosophies. A brief background on what I have done in the past and my academic and professional qualifications. You can reach Lamoksh Investments via Gmail, YouTube channel, Twitter, LinkedIn, or Telegram. Please feel free to give your feedback and what changes do you want in our newsletter, and if anything else that you would like to be incorporated. Hope you like the November newsletter. Thank you so much.